Crashes, they just don't happen randomly. Markets don't collapse just out of nowhere. And this week, Bitcoin, Ethereum, and the entire altcoin market got taken to the cleaners. The U.S. Senate is actually quietly moving this, submitting a bill to remove the SEC from the crypto oversight. If that passes, the entire playing field is going to change overnight. The timing is almost too perfect, crew. Is this crash basically an accident because of technical issues, or is this phase one of an institutional takeover? So welcome back, Crypto Crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already, and make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. All right, let's get right into this. All right, now I'm going to give you a fair warning. All right, I'm going to give you a fair warning for this video, crew. All right. Before we dive into Bitcoin, Ethereum, altcoins, and everything happening today, I want to say this up front. There is so much information hitting the market right now: regulation, macro flows, bond signals, institutional positioning, global liquidity shifts, i.e., the yen carry trade that we went over yesterday. Every single one of these events is going to shape Bitcoin in the short term, medium term, and the long term. It's not noise. There's a roadmap here. And if we could just get the pieces together and follow it, we're going to be able to just kill it. All right. So in today's video, we're going to break it all down in pieces so we can understand exactly what's unfolding and what could potentially be coming next. Because in trading, we always have to be looking for the next move of significance, right? So the first question that we have to ask is this a Bitcoin bear market, right? Or is it just like a deep, deep pullback? Well, technically, it is a bear market because it meets the criteria of a bear market. Now, I'm not going to get too into it, but when we were above 100,000, we really weren't technically in a bear market yet. When I saw that we couldn't get over 106, 108, I said, the market's turning down. So a lot of you actually noticed on one of my videos, you said, Tom, you seem to be getting bearish right now. Because let me explain to you, in a bear market, you need certain criteria to be met. All right. Now, I'm a technician, so I subscribe to these things. We need to see a sustained price decline over 20% from the previous peak. Okay, we had that. Even at 100,000, we had that. We need to see a persistent negative sentiment. We kind of had that at the 100,000 level, not totally. You need to see trading volumes weaken. We really didn't have that. Trading volumes at that time were okay. They weren't the strongest they were. Sentiment, of course, was also down, but it really wasn't meeting that criteria. Dips were being bought. Now, in a bear market, dips are not bought. At that point, dips were being bought. As soon as I saw the dips were actually not being bought, we could say, okay, we basically came into a technical bear market. However, not all bear markets are equal. And I'm going to go over this in more detail tomorrow because there's just too much to cover today. But as you see, if you look at this, the left head, right shoulder, bearish retest, crash down to the level I told you we were going to potentially go to, actually a little bit deeper, went down to what? 80,822. Now, 80,000 is a key level. And we're going to get into all that right now. But right now, let's just look at what really is being whispered in our office, but nobody really wants to say out loud. And I'm going to say it. I'm going to say it out loud. This crash feels engineered. Why? If you look at this, I mean, it's just too much at once, man. It just reeks with like something's up here. Okay, if we look at IBIT, while markets were nuking, ETF outflows hit a record level of 3.7 billion. Liquidity dried up all at once. Altcoins completely carpet bombed. High-tech stocks unwound. That's what we were talking about when we were looking at the NDQ against Bitcoin, right? We talked about this. And we said at that point, this is how markets fool you, okay? Now, this is where most people tap out, where headlines scream, it's going to collapse. where real money, real moves start to begin. Now, Bitcoin is copying the NDQ bottom setup. We said that. Now, we're going to work through the short term because now you got to understand, I'm going to be talking medium term, short. We're going to be doing short on that 2-hour chart. Now we're talking a little bit medium term here. Okay, so we need more time. Yet there's so much stuff that's happening in the marketplace that you just have to be aware of. And we want to give you the best information you can possibly have to make the best decisions you could possibly have. So right now, really we're saying you got to fade the fear, not the opportunity. Okay, now you got to pick your points. Okay, because there's risk off headlines everywhere, even stories about energy grids like going down. Like, what the heck is going on? Now, what's the most important thing that's happening right now? Well, the Senate, the U.S. Senate. I'm going to take you over to one of our X posts. Right here is one of our X posts. All right, now look at this. The Senate was submitting the biggest crypto bill in U.S. history. Perfect timing, right? It's the same playbook that we saw during COVID. If you weren't around in COVID, just go look at the chart, 2020. Create the fear, wipe out all the leverage, reset, big guns now accumulating, launch the next phase. Now, it's not happening overnight. Okay, we got a lot of stuff to get through. We're going to get through it on the short term. Now, you got to understand, I'm talking medium term here. I'm preparing you because, as I said, we have to look for the next trade of significance. All right, we can't wallow in like, we got to look forward. And of course, you have to use stop losses. You have to understand that, we're going to pick our battles. Not every battle is going to be won. Okay, we're in a big war here, but we got to pick the points that we're going to stand on. All right, now. This crash wasn't chaos. I think it was, it was just being choreographed perfectly. So let's break down exactly what this bill does, because it's a nuclear bomb, but in a good way. The U.S. Senate just submitted a bill to kick the SEC out of crypto. If it passes, Bitcoin and Ethereum become digital commodities. The CFTC becomes the primary regulator. The SEC loses its chokehold. Exchanges finally get clarity. Tokens are no longer at risk of random enforcement. Institutional products are going to explode because of this. Pension funds, endowments, sovereign wealth funds get green-lighted. That was a tough one for me today. Sovereign wealth funds, green-lighted. Yield products, staking, settlement, all become structurally clean. So this bill, if it gets through, isn't regulation. It is a regime change. That's why if we look at what Coinbase CEO Brian Armstrong said, I'm going to take you over to that post. He basically said this would be the most significant crypto bill in U.S. history. And the timing with this crash is just a little bit too perfect for me. It's just insanity. The big guns, they wiped out the leverage, right? They shake out the impatient retail and they clear the runway. This is exactly what's happening. So we got to start to prepare for institutional entry. The script couldn't be better. If we really look at this, leave some comments for me if you tell me if you think that I'm out of my mind. Now, I'm not touting we're going up from here. I'm not saying that. We're going to get into the short term, and I'm laying the groundwork for you that because all this stuff has to be put together like a puzzle. So we're going to do it for you. That's why I say you got to join our pro group. I'll show you how to do that later. All right. So here's what nobody's talking about. With this regulation incoming, the crash was really a blessing in disguise. This movement down that we saw in Bitcoin was actually a blessing to clear the field, okay? So it's a clean pullback before regulatory clarity. It's the first time ever we're about to get really a level playing field. Now you got to pick your points. I'm not saying just go buy Bitcoin. I'm not saying that. I'm saying we're gonna pick the points. I keep stressing that because people watch 5 minutes of the video and go, "Oh, you said that it's going up from here because of all this regulation." I'm saying it is, but it's going to be. It's going to be a battle, okay? It's going to be a battle. So while all this is happening, retail is fleeing at the worst possible moment. I can tell retail is leaving. because a lot of people that watch me on the YouTubes are retail. And when you see views go down, it's because, well, it's not going in the direction that retail wants it to go. You know, they needed to see it higher, higher, higher every day, and then they come in for the hopium and everything else, right? But we're real traders here. You know, we said that if we couldn't get over 93, we were going down to 84. I said 85. I said 86, 85, potentially. I don't know if I mentioned 82. I didn't really think we were going to hit 82 that quickly, but we did. All right, so we're going to be going over that in a moment. But anyway, this could be the exact moment where the market turns the corner and starts building the next wave higher. And it's going to be done in stages. It's not going to happen in one quick, swift, boom, we're back up at 116. No, it's not. That's not going to happen. I know most of our audience that constantly listens every day, the most of your middle managers, your professionals, maybe you got families, and you don't sit there and day trade every tick. And that makes my job kind of simple. Just lay out every option on the field so you can make smart, disciplined decisions, not emotional ones. But if you do want to trade daily, join our pro group. All right, so now let's get into Bitcoin, all right, as far as the short term. Now we're looking at this head and shoulders fallout right there. Unbelievable. Marketplace, short-term traders took advantages as the bears are fully in charge right now. However, we got to see what points need to change in order for the bears to actually start to lighten their grip on this marketplace. So let's get over to our 2-hour chart where we can actually work some magic in it. All right, so yesterday, wow. As it stands right now, Bitcoin itself went down to 80,600 on this chart. So, like the first level of kind of reprieve is at 80. It's really right here at 83.6. It's banging into its first area of potential resistance, flip support. Okay. So now a lot of people say, okay, like, how do I determine whether a marketplace is truly going to bounce? Is the level going to hold or not? Well, with years of experience, you kind of start to understand price action. But I'll try to do the best that I can, really short, like not a long time, in covering it. Okay, so let's just take this 91,000 that I was talking about over the past few days, right? I said this 91,000 is very, very important. 91,284, because that was the point that we actually came down to before we went up to like 100. And we broke to 102. We came down here. We went back up to like 104. And then once we lost this, we broke down to the low of 74,000. So let's just use this level. All right. So how could you look at this and say, okay, this marketplace is holding? It all has to do with price action itself. So I'm going to grab a path right here. I'm not good with paths. So anyway, let's just say marketplace made a low, comes up to here, makes this high, comes back down, makes this higher low, comes back down, bangs into this top, goes a little bit higher, comes down, basically another higher low, comes back up, breaks a new high, comes down, touches the 91, comes here, plays at the 91, and then finally starts breaking up. That's the price action that you would need to see when a marketplace is actually holding a bottom. Now, the opposite is true, exactly what happened here. So I'm just going over that for some traders that want to know, like I've read some comments like, how do I know, Well, how do you know it's going to break? All right, now, really simple market structure, right? Low, high. Forget about this low. All right, let's just go low, high. Well, actually, I can't say that. Like low, high, low, like lower, high, deeper, low. This point becomes the break point. You break that, and you're going lower, short term. Okay, that's a classic market structure for you. So I'll go over it once again. So I'm sorry for some of you that do know it. Just okay, it's a review. So you got the low here, you got a high. Market comes down, makes a new low, a higher low, okay, against this. That's good. All of a sudden, it just cannot get up over this top. It can't, all right? It comes down, it creates a lower high, gets a push down. It's breaking this level. So this level right there becomes your structural low that if you break, you're going lower. That's like the setup. Okay, so you're hanging out. If you're a bear, you're just waiting. Now, you could, as a bear, you could sell up in this area. This is a perfect area to sell in, right into. Okay, and then look for the break. And then you press on the gas, you break this, you're selling more. All right, so now, if we look at this, Bitcoin slammed into the low 80,000s, right? We had 3.7 billion of ETF outflow. Where's my iBit? Where's that dog? Here it is. We told you about this thing. We got to keep our eye on this thing today too. It's 9:23. It's going to open up in like 7 minutes. It dropped below the 50. So where's the next level of support? Next level of support for iBit's really at 46, 46. Yeah, actually, I have it right here. 45.91 is the next level of support. I think it's. I don't think it's going. I don't know, but I mean, if we break this, this is really bad. This is Bitcoin itself is going to dump deeper. That's no doubt about it. But if we can hold this and start the recovery, we may start to get the glimmers of where the recovery could occur in Bitcoin. It's not going to happen very, very quickly. Okay, so but we are still above the 2025 yearly open. And that's the line really between continuation and collapse, right? So we got to watch that. So the key levels right now, 80,000 is a battle line. There's a liquidity pocket at 76,500 in Bitcoin. All right. So there is a liquidity pocket down there. Where's my little chart right there? Down at 76. Now, here's the thing. 80,000 going to hold. If we can hold above this 84,000, we can get above 84,000 and chop around. We're starting to build a base, which is good. It means that the marketplace is calming down for the time being. There's on the lower level, there's huge institutional demand at the old low of 74, potentially even 72. Okay. And the upside magnet, if we can get through, if we can hold the 80, upside magnet right now it is like that 91 and then 95,000. So Bitcoin right now is in what I call the repricing window. It's not trending, but it's starting to prepare for the next regime. All right, now, why this crash makes sense for Bitcoin? Well, we have institutional pause. We got risk is on freeze right now. ETF outflows, right? The ETF flows are waiting. We got leverage unwinds. We got market structure resets. We got fear. That's now the paintbrush. Regulation is now the canvas. Now, we talking about this. We got the DAX. Okay, here's a macro driver for you. The DAX is pushing up. That means the dollar is getting stronger. Now look at this. We're at a major resistance point. Okay, this is a 2-day chart. We're right up at resistance. If the dollar can roll over from here, start to move down, get weaker, then Bitcoin could get some life because that's creating short-term pressure on Bitcoin. But historically, the DAX peaks, Bitcoin bottoms, the DAX, the dollar index rolls over, and Bitcoin bull runs begin. So the macro support, supports a larger move later right now. We got to pay attention to that. Now, I'm going to show you a signal that everyone else is missing, and this one's a kind of a huge one, all right? And right now, we don't even have the X post up yet, but 8.8 billion flooded into U.S. Treasuries in a single week. That's the biggest wave since April. Foreign capitals rushing back into American assets at full speed. Now, that's good and that's bad because that means basically they're thinking rates are going to stay kind of high in the short term. However, when global money positions this aggressively, risk assets always follow. Okay, so we're starting to see some liquidity again entering into the system because everything is about liquidity. So the treasuries are step one in global liquidity rotation. Money always follows the same sequence. Cash, short-term bills, 10-year notes, tech, and then crypto. It's a pipeline. And the pipeline is loading again. So again, this is now medium term. Okay, this is not, this is medium term. It's going to take some while. And this is really where that, that 210 spread that I talked to you about in a prior video is actually coming into play. Because part of this inflow is a professional yield curve trading. That's happening. Just like I said in my yield curve video where we talked about that. Okay, traders are putting on a classic position. They're short the 2-year, the steepener. Why? Because they're betting that the curve was going to uninvert. The Fed will cut rates. They're betting on that. Long-term yields will drop faster than short-term yields. So recessionary pressure is rising in this marketplace. Okay, duration becomes the flight to a safety trade. The steeper the trades push, the steepener trades, right? They pushed money into the 10-year, and that continues to contribute to Treasury inflows. But here's the kicker: the inflow was too big to be just the Treasury guys. This was global repositioning. That's what's happening, and we're going to show you that in the next post. But global capital is moving. European bonds, they're definitely weakening. Okay, we're going to have to start to see more inflows into IBIT. The Japan bond market is destabilizing. We talked about that. The 10-year yield up higher than 2 decades. What the heck is going on there? That created the risk off for the yen. China markets are definitely slowing. They're going to have to cut rates. Emerging markets are bleeding capital. All that money is going somewhere safe. U.S. Treasury for the time being. I don't know how safe it is, but, which leads to the punchline. If this much liquidity is piling into bonds, imagine what's going to happen when it rotates into crypto. And again, the window is shrinking. You got to pay attention. We'll guide you through it. That's why we have a trading group, and you should think about joining it. It's free to join, and I'll show you how to do that in a second. So here's the takeaway. This isn't really the end of the Bitcoin cycle, okay? It's a pre-launch cleanse, right? So if we look at Bitcoin, the crash line, I want to show you this crash line. Where's my Bitcoin crash line? Where is that guy? Hang on a second. I got to find that chart. Now we could say that every macro crash touched this trend line. We had 2016 deflation scare, 2020 COVID, 2023, 2025 Asia tariffs, now regulations. So each flush down was violent. Each recovery was, in fact, legendary. We're back at the line. Now the whales are waiting. Institutions are waiting. You either panic with the crowd, you leave, or you position with the pros. So, like I said, now here's an interesting thing. In our pro group, we already gave out dollar cost averaging levels way before this deep retrace, because we see from some things that are very similar to the 2020 crash. Now, if you weren't around in 2020, you're just getting involved now. I'll show you what that marketplace looked like and exactly what we're seeing. It's mirroring. So in 2020, crash, total disbelief, then a 10x rally. 2025, crash, total disbelief, same violent drop. Now we need to develop a sideways base. We need to develop a sideways base. We could be starting it now. The 80,000 is a very, very important level, okay? Then we have the same launch setup then. So we got to start to position really when it hurts, because the real move starts when there's absolute emotional pain, that's that's where legends buy. No, I'm not saying you just go in and buy everything. I'm not saying that. I'm saying we got to build a base and get into our pro group, because we'll be looking for this base to start. All right, now. So in closing with Bitcoin, now if we look at it, because I think that this is a complete, utter manufactured crash designed for BlackRock, Vanguard, State Street, you name it. They've been chilling out. They just pulled the rug out. We said it in a previous video. If you look, RSI just broke its cycle trend line. Every major macro top had the same signal. RSI trend breaks, price rolls over, full cycle reset. 2025 is starting to look like the same warning is happening. So I don't think this is another cycle shift. I think that capitulation is going to come next. Okay, so this is where we're thinking that people aren't paying attention to that major background that's going on with all the regulations that are happening. That's why we're calling your attention to it. Now, let's go on to Ethereum, because Ethereum is where big institutions are quietly making their move. Now, Okay, I know all you guys. We've been big on Ethereum. We're still thinking Ethereum is going to 10 grand, 15 grand, 20 grand. We do, okay? Now, of course, we had some setbacks because one, Bitcoin dominance. That for sure is hurting us. However, we broke a technical support level, 2800. The 3000 held. Ethereum was holding with both hands in its teeth for a while. Once it broke, because of, look where Bitcoin is. It's really doing quite well considering what happened with Bitcoin. Ethereum is still 20, like 2770, 2800. It's held pretty strongly. Now, let's get into it. Like, what's going on? Why am I touting Ethereum is going to be like the next one? Well, let's check out what's going on with BlackRock. All right, let's just check that out real fast. Here we go, the skunk himself, BlackRock. All right, what's going on there? Well, they basically iShares Ethereum Trust has officially registered in Delaware. Translation: they're preparing Ethereum for institutional staking, yield products, settlement infrastructure, Wall Street grade Wall Street grade Ethereum income streams are being set up right now. This isn't retail ETF. Okay, this is the backbone of Ethereum's institutional yield era. So it's starting now. We also have Japan. Our X post right here. This is a massive and it's really underreported. Japan is cutting Ethereum capital gains tax from 55% all the way down to 20. Now, think about this. If they pull money away from foreign markets and they bring it home, what do you think they're going to do with all that extra cash? Maybe invest in Ethereum. Maybe. Okay. Now, that's another part of the puzzle, right? So Japan is just one of the largest tech markets on earth. Okay, it is one of the largest tech markets on earth. So the door opens the floodgates for fintech, corporate treasuries, net worth capital, retail adoption. Staking demand, less tax equals more capital means bigger inflows into Ethereum. Okay, that kind of makes sense, right? Let's move on to the last one, the Banque de France, which I mentioned a few days ago. You got UBS, you got Societe Generale, the Banque de France, all bringing repo markets, the backbone of global liquidity into Ethereum. The global repo market is 12.5 trillion with a T. 12.5 trillion with a T. Okay? That's 1%. Just 1%. Just 1% of that is 125 billion moving on chain. That, that's not experimenting, that's transitioning. So Ethereum itself, if we look at this chart, we could see that the bull run it's okay. So we had to dip down. What the low of Ethereum was, what, 2600 or something like that? What did we get down to? Let's check out the low of Ethereum if I can get my little pointer on there to get the right price. Ethereum is low, 2621. So short term, we got to break 3,000 again. If we can break 3,000 again, we could start building a base also. So really, we have Ethereum, Bitcoin in a historic support zone. We got major support in Ethereum at 2,400 to really to 2,650. Okay, a break above 3,200. We got the next stop at 4,000. So Ethereum is the positioning for an institutional yield cycle. All right, look, now altcoins themselves. All right, let's look at Bitcoin dominance. All right, because Bitcoin dominance really is just out of control right now. So let's check it out. Right now, Bitcoin dominance is the same as yesterday. So alts themselves, they're not going anywhere, fellas and ladies. They're just not happening. So, but here's the thing. Alts were crushed. Okay, they took the biggest beating, and that's exactly how institutional cycles start, believe it or not. They just get everybody out. Leverage lives here. It's shallow liquidity right now. ETF outflows hit the majors. Alts got the shock waves, right? Risk off globally. Uncertainty kills speculative capital. But here's the alpha. When regulatory clarity arrives, altcoins move 3 to 5 times faster than the majors. So you got to pick the right ones. What you should be looking for is relative strength, volume return, Ethereum ecosystem projects happening, hitting AI tokens themselves, real world asset tokens, and of course, gaming layer 2 rotations. This is a dispersion phase right now. So you just got to pick the right ones. Actually, you got to watch Bitcoin right now. You got to make sure Bitcoin stabilizes. Now, Bitcoin's at 84,000 odd, 85,000, which is good. It's recovering. Okay, that's very, very good. All right. So how do you join this pro group that we've been talking about? All right. So I'll take you over right here. You see this link right there. You'll be taken over to our pro Telegram trading community, completely free to join. We drop insane alpha trading opportunities daily in there. Also, if you want to go it alone, we got two outstanding brokers that you can work with. We got WEX, low fees, fast execution. We got BTCC, low fees, fast execution. WEX is offering some really great bonuses through our link. I think it's no fees for life. BTCC is offering a $500 US dollar token giveaway. Your small account, $1,000 to trade with, just get a 50% increase. Not a bad deal, right? But I do suggest you come in and you join our pro group because we do all this analysis for you. We got some excellent traders in there, and we're going to be bringing more on. So get ready for that. There's an announcement coming up. We're going to be getting really, really hot right now. So let's just zoom out one more time before we close up, all right? What's happening, all right? What we have to keep an eye on itself. I believe, and this is just me, I believe that the crash was not random. It aligned perfectly with what the Senate is doing right now, preparing the most transformative crypto bill in history. A bill that removes the SEC from the equation. That would be awesome. Okay? It finally gives us a level playing field. Institutions are not experimenting anymore with crypto. You got to keep that in mind. Like major institutions are no longer just on the periphery of this thing. They're involved. That's a problem that we have sometimes because they push us around a little bit. But if you got the good technical levels, you can hold on. All right. And of course, if you don't over leverage yourself. All right. You got BlackRock preparing for Ethereum staking. Japan unlocking Ethereum capital. Banque de France is putting repo markets on chain. Bitcoin is holding the macro structure. Alts are in reset mode. And as retail runs away, the next wave is already forming. So what do you got to do? Well, you got to come on over to X, follow us on X, where we talk about Bitcoin, crypto all day, every day. What else you have to do? You got to think about joining our pro group. What else you got to do? Well, you got to trade with your head and not over it. And for sure, as a short-term trader, you got to enjoy the party, but dance near the door. I'll see you tomorrow on Saturday where we'll go over some other deep ideas and other deep dives so we could stay on the cutting edge and get ready to profit off the next leg, either upward or downward. I'll talk to you soon. Cheers.